announced at the company's Snowflake Summit on Monday. Also, 4% pre-market, celebrating its 25th listing anniversary.
Hard to know, if it says much more than there's this obvious kind of land
also
grab
celebrating
for data to train the AI systems.
Mike mentions
don't pretend to know exactly what
and this
goes
Snowflake
into
partnership
this
with
type
NVIDIA
of a partnership.
getting some attention.
You just say there's a
announced at the
partnership and they
company's
have
Snowflake
something
Summit
with
on Monday.
Microsoft and NVIDIA at the same time, and just sort of opening up, and it feels like we're at that time.
Hard to know,
if this says much more than there's this obvious
in this area
kind of land grab for data to train the AI systems. Don't pretend to know exactly projects, and you're going to run full speed to try and make it a product. You just say there's a partnership, and they have Snowflake with Microsoft very up and down story. At the same time, people love and just sort of opening up, and it feels like we're at that time of not necessarily kind of undisciplined exploration and investment in this area, just to get up to a point where you can say that you have already and NVIDIA projects, you're going to run full speed to try and make it a player in all this. So that's where we are. As I said yesterday, Snowflake is 6%. Very up and down story. People love the product.
I wonder what you made of some of the. Here's the quote from Jensen, basically talking about the difference between the old days and how you manage data, and just the size of the data flow now is so large. And in his words, you have to move to compute to the data.
The size is so large, and I guess the way they would portray it is it's actually the raw material for what you're building next.
I wonder what you made of some of the. Here's the quote from Jensen, basically talking about the difference between the old days and how you manage data, and just the size of the data flow now is so large. And in his words, you have to move to compute to the data.
The size is so large, and I guess the way they would portray it is it's actually the raw material for what you're building next. So that's where the value has migrated.
Neutral in terms of what it does.
Again, not going to pretend to know exactly all about this stuff, but it does seem as if that's the front line of
compute comes to the data, so to speak, as opposed to the, as he just said. As we all try to understand the use cases for generative AI platforms and how these businesses are going to deploy it beyond the ones that we are aware of and that are fairly easy to understand, namely, but it is one of the largest data warehouses on Amazon, Alphabet, fastest growing on Microsoft, relying on some obviously NVIDIA.
And the way the market has treated it to this point is really, we don't know to what degree all these investments are going to provide great returns longer term. We don't know who's going to win or lose. What we know right now is everyone's spending a lot more money than they otherwise would have in this area.
Or
and
Alphabet,
there are people who are selling
Amazon,
or
obviously NVIDIA.
And the way the market has treated it to this point is really, we don't know to what degree all these investments are going to provide great returns longer term.
And if you can
we don't know
do
who's
it
going to
through a
win or lose. What we know right now is everyone's spending a lot more money than they otherwise would have in this area.
Productivity.
And there are people who are selling it.
And then it gets better and better.
Essentially, I guess you've got an enormous amount of data that's generated from your customer/client base. You want to understand, you want to be able to interact with it in an immediate way. Stock's up 40% from the November lows, but they actually say from too slow to too fast.
You can get answers very quickly
and that aggressive push, in Bernstein's view, could create what they're calling a near-term air pocket in search ad prices. There's the question, though,
so Bernstein is concerned about that idea that there will be this
behind Bernstein's downgrade of Alphabet
in ad pricing, and also that maybe they're going to sacrifice margins in the short term because they're going
to too fast
kind of show that they're investing
in that aggressive
push
in Bernstein's view,
admitting that they
could create what they're calling a near-term air pocket
base if there's more flexibility on the cost line. So Bernstein is concerned about that idea that there will be this YouTube kind of slip pressure in ad pricing, and also that maybe they're going to sacrifice margins in the short term because they're going to kind of show that they're investing other parts of the market that seem like they're getting squeezed, admitting that they could be a little bit that are hollowing out if there's more flexibility on the cost line than they're anticipating right now. They also do point out that
advertising Meta today,
YouTube
new street high, targeted 360.
By just a massive inventory.
They project 2024 advertising revenue growth of 14.
And other parts of the market that seem like they're getting squeezed, Amazon search and all the rest of it that are hollowing out.
I know Mahaney was at 350. Here's Citi besting him by $10.
Meanwhile,
speaking of advertising Meta today, Citi, new street high, targeted 360. They project 2024 advertising revenue growth of 14.
Is kind of, I think,
specifically point out the monetization trend in Reels
models and targets toward that area.
Of course, I know Mahaney was at 350. Here's Citi besting him by $10.
400. So it's no longer the case that you can say, well, it's cheap. It's more about fundamental momentum, the clarity on margins, the stock completely fell off cliff. So everyone is that story's been working, I think, for a while. And it is a good reminder that with Meta and Netflix, toward that they're still coming back. The all-time high was a bit higher in terms of stock performance. It's not like NVIDIA where they're just kind of carving out new highs. It's no longer the case. Still this funny mode in the NASDAQ. It's more about some momentum that's just kind of gone off to the races, and others where it's still in repair mode. CapEx. That story's been working for a while, and it is a good reminder that with Meta and Netflix, they're still coming right up to that from deep holes in terms of stock performance. You're looking at 52. It's not like NVIDIA where they're just kind of carving out new highs. So it's still this funny mode in the NASDAQ where you have some stuff that's just kind of gone off to the races, and others where it's still
didn't look 100 points away from what happened.
Well, at that angle, it's going to get there before too long, I think.
Well, that's getting close, though, Mike.
Yeah, it is. No, it's right up to that bump.
Let's not forget the monster that TikTok is. No, I'm looking there.
Oh, yeah. So
we don't talk as much about it being banned in the U.S. I'm not quite sure what's happening. That effort is still much closer out there as a possibility. It didn't look 100 points away. It's part of ByteDance.
Well, at that angle, it's going to get there before too long, I think.
Absolutely. It's a monster. But yeah, I'm looking at the same. If it had a market value, let's not forget the monster that TikTok any of the major media companies. And we don't talk as much about it being banned in the U.S. I'm not quite sure what's happening. That effort is still possible. Again, you'd have to see the possibility. And again, it's part of ByteDance. Also want to understand TikTok is just you still have to be discounting the possibility of a ban. Monster, which if it had a market value, it would probably be above. You may see it have to go public or be separated in some fashion.
I mean, there isn't a $200 billion media
or Netflix.
Probably so, right?
I mean, it's certainly possible. Again, you'd have to see that fully broken out, and then you'd also want to understand.
By the way,
you still have to be discounting the possibility of
Jessica
a ban.
Reef early today, reiterating Disney by 135.
Well, you may
remain confident they have the proper mix of IP, content, brand value, park expansion opportunities. We believe Bob Iger's deep industry relationships will steer the company in the right direction.
Yeah, Comcast is 170, numbers, so.
By the way,
estimates a little bit on
Jessica Reef early today, reiterating Disney by 135. We remain confident they have the proper mix of IP, content, brand value, park expansion opportunities. We believe Bob Iger's deep industry relationships will steer the company in the right direction.
For some time.
I should show numbers as well.
Linear cable networks, sports rights, ESPN. How do you position it in terms of its future? Strategic pivot and focus for the company is going to be key. We know obviously how to use the losses there and/or finally get to free cash flow, and earnings of the company for some time. And again, the question becomes, not to mention they're going to have to find a new CEO. Sports rights, I mean, you're talking, the clock is already ticking in terms of if you want somebody to be anointed and with some period of time prior to Mr. Iger's departure at the end of losses there and/or finally get to
shorter term,
get to free cash flow positive.
Box office is limping to the finish, in the words of Roth yesterday in Q2 after The Flash and Elemental are disappointed. So there's something going on in box office, and a lot's on the line with Mission Impossible coming in the next week or two, and Indy
Oppenheimer and Barbie same weekend. We'll see what that does.
Shorter term.
Yeah, there's even some talk about
box office is limping to the finish, in the words of
handicapping of how these films are going to perform, especially with the franchises, the superhero franchises. They keep underperforming the estimates of what the box office, how they're going to open.
With Mission Impossible coming in the next
those things are just measuring Oppenheimer and Barbie. You know, I know there's another one coming and doesn't really measure. There's even some talk about. We'll see if that's a longer-lasting thing. I mean, it feels like they've got at least enough releases coming with the franchises, the superhero franchises. Part of the business. I think I saw AMC. I mean, not estimates of what the box office, how they're going to open. And I think that because those things are just measuring awareness. You know, I know there's another one coming and doesn't really measure intent to go. So we'll see if that's a longer-lasting thing. It feels like they've got at least enough releases coming that it's again a viable part of the business. I think I saw AMC. I mean, not that even it's trade on week-to-week box office, but I think it's down to $4 again.
Did you know that? I've always wondered how does he get insured? I mean, for all that stuff, can you get insure the production?
Sure, you do. It's a matter of
the Oppenheimer movie. For me now,
he's 78.
Telling something. How does he do that?
Wow. Certainly don't look like it.
Even at 78. All right. You know what? I'm going to hit my. Did you know?
I just wondered how does he get insured? I mean, for all that stuff, can you get insure the production?
The prices are due. It's a matter of what the cost is.
Just to tell you exactly the venue. A stunt for me now is getting out of bed without like pulling something. California and San Francisco.
It's something beyond stretching.
Who shows up today. You know what I'm going to hit Mike's expecting to hear from guys. Not much to update on. Trial begins again. Remember, yesterday was a day off. The key here is sort of how much time the FTC really has to present their United States District Court. You're going to have Northern District California and San Francisco arguments on one day. So we'll see who the question still becomes. FTC shows up today. Obviously, we're still expecting how they go about doing it. Nadella, with 3 days left. Bobby Kotick and Activision. But the key here is sort of how much time the FTC really has to present their case. Would have to be You're going to have extended CMA oral arguments on one day. So the question still becomes FTC ability to overcome their objection through the appeals how they go about doing it with 3 days left. A stubborn in the trial, so to speak, even if they do prevail against the FTC. But as we've said many times, July 18th is when the FTC trial is important, not just for the success of CMA of Microsoft's efforts to complete this remains a key but even more so, Mike, in some way, because if the FTC does lose and fails to get a preliminary injunction, that will work. It may chill their ability, perhaps, to so to speak, even if they do prevail against the FTC. But as we've said many times, they have had a significant FTC trial is important, not just for the success of deals that were not to complete this deal.
Yeah, their willingness
to, Mike, in some way,
to some degree, roll the dice
if the FTC does lose and fails to get a preliminary injunction,
it seemed like there was a little more.
It may chill their ability.
So yeah, very interesting. Also, did we talk about
court filings?
Oh no, I was going to say Nadella talking about 500 billion in revenue.
In the filing,
right?
10% plus revenue growth through 2030 would double their size.
Yeah, their willingness to
the next 7 years.
Yeah, half a trillion in sales by 2030. Whereas before, 10% growing on that base is pretty. So yeah, very interesting. Also, did we talk about
I think
two different from what you've seen recently, especially when there's some tuck-in acquisitions along the way.
In the filing,
in the filing, right?
10% plus revenue growth through 2030 would double their size in the next 7 years.
Almost half a trillion in sales by 2030. Exxon got 10%. Growing on that base is pretty impressive. That's just the scale thing in terms of, I think, two different from what you've seen recently, especially when there's some tuck-in acquisitions.
Guys, real quick
along
on
the way,
antitrust front, I forgot to mention as well, the other key thing we're tracking, of course, is Amgen Horizon.
Apple is
one
almost
of the larger deals of the year. The FTC also opposing it.
And Exxon got to 400.
Federal court, but also through an ALJ process.
So, that's just a scale
when
thing.
They filed their ALJ, they failed to lock it. Guys, real quick on the in other words, they redact things, but they failed to lock the document, Mike, and so people were able to download it, put it back into Adobe somehow, and see all the redactions. Not a good move on the FTC's court, but also that's ALJ process. Housekeeping. I guess they got a lot going on, and somebody failed to do something. They failed to. What it allowed for was people were following this closely to say, well, what was redacted? They failed to. Was there a smoking gun document, Mike, that the FTC had? People were able to download it, put it back into Adobe somehow, and see all the redactions because everybody's looked through it now. On the FTC's various. There was also some estimates housekeeping. I guess they got a lot going on, and somebody failed to do something higher than had been anticipated. But what it allowed for was there a smoking gun? This closely to say, well, perhaps it points to a very much was there a smoking gun there that the FTC had? Apparently not. Failing to just do something they should have done one other time because everybody's looked through it now. Where again, a document was not locked, and you were able to unredact Amgen in terms of the Horizon drugs.
The same week as we got the depositors for SVB by mistake.
Was there a smoking gun? No. And perhaps it points to a very much again. We're just going to mention
the transports really quick because the airlines aren't moving.
Failing to just do something they should have done one other time. Apparently, this has
stuff like that. Transports have now basically caught up. They're even with the S&P 500 year to date. It's mostly about the airlines. Same week as we got the depositors for SVB. Yeah, the stock prices are still lower. But if you look at all the debt and the issuance of equity, we're just going to mention the transports really quick because the airlines aren't moving. Enterprise value of Delta is just about the pre-pandemic highs, and the cash flow even by the new guidance is not there yet. So transports have now basically caught up there, even with the S&P 500 fundamentally. It's mostly about the airlines at this point. I would just say in terms of comparing it to pre-pandemic, yeah, the stock prices are still lower. But if you look at all the debt and the issuance of equity, core orders pretty solid. Enterprise most sectors are green, with the exception of, say, energy and healthcare. Let's get to Bob Pisani. Morning, Bob. So, to me, it doesn't seem like the market's out of whack with what they're saying fundamentally and how big the company is in terms of capitalization after raising that debt and equity.
Sector gainers, laggards here.
We should point out, as we've mentioned at the top, durables came in above. Core orders pretty solid. But most sectors are green, with the exception of, say, energy and healthcare. Let's get to Bob Pisani.
Doing a little bit better. Consumer discretionary is also a bit stronger. Metals and mining, which I watch very carefully, there's a very good rebound indicator for global demand overall. Laggards here, that's also doing better. And REITs are bouncing back. We had of course a mini rally yesterday in REITs, but most of the big names are bouncing back this morning. So Park Avenue, that some of the cyclical sectors are doing a little bit better. Consumer discretionary is also a bit stronger. In terms of laggards, metals and mining, which I watch very carefully, there's a very good not a lot of energy indicators, sort of global demand consumer staples. Obviously, that's also doing better, and REITs are bouncing back. We had of course a mini rally yesterday in REITs. Not a lot of big energy from energy or from the banks here. So very mixed overall for the month. Remember, the S&P is up about 3%. Once again, we're closing out the month. In terms of the markets now, what's going on? Well, it's pretty simple. It's all about staples. Obviously, again, here. So Walgreens is really what's weighing. Walgreens just bouncing back today in consumer staples. So maybe that's not to the downside yesterday. Not a lot of big energy from energy or from the banks here. So very mixed overall. Central banks are still tightening. So now we're back to this idea. Well, they didn't cause a recession yet. In terms of the market going, what's going on? They're going to cause a recession. That seems to be the overall. And you can see this again here. Playing out in Europe, for example. Christine Lagarde today saying higher for longer. We're going to keep rates higher. So the good news is longer to combat inflation. There's no signs of recession. Which is the bad news is central banks are still tightening. So now we're back to this idea. Well, they didn't cause a recession yet, but if they keep going, they're going to cause a recession. That seems to be the overall. And you can see this playing out in Europe, for example. Christine Lagarde today saying higher for longer. We're going to keep rates higher for longer to combat inflation. There's the stock 600, which is the S&P 500 of Europe. And you see Europe was outperforming the government there had to step in. The People's Bank of China had to step in to support the renminbi overnight because of the weak growth prospects hiking rates. And you can see the S&P and orange line is China essentially for the last 3 months. That's a real disappointment because a lot of people thought this was the year for Europe to finally outperform. Just want to note what's going on for the month. Same in China as well. The government there had to step in. Like metals and mining, Bank of China had to step in to support the renminbi overnight because of the weak growth in some other sectors as well, including the S&P and the orange line is China. And you can see we have diverged again. China underperforming here, and yet lower the growth prospects. Still, finally, just want to note 3%. What's going on for the month as we close things out? Small growth is outperforming names like metals and mining, industrials, consumer discretionary. That's good, but weakness in some other sectors as well.
Let's check bonds today. As we said, we'll get some data. New homes are coming. Conference board. Richmond Fed. Interesting discussion around the Fed this morning as well. Morgan Stanley a couple of weeks ago thought the Fed was done, and now they're saying that the bar for a hike in July is lower than we previously expected. Maybe another one coming. Before we go to break, let's check bonds today. As we said, we'll get some data. New homes are coming.
Assessing the fallout of this weekend's events and the implications for Russia and Ukraine.
Morgan Stanley a couple of weeks ago thought the Fed was done, and now they're saying that the bar for a hike in July is
the ultimate outcome of all this remains to be seen.
President Biden paying close attention to the developments out of Russia. This is Secretary Yellen. Plans to visit China in early July, marking the first high-level economic talks with her new Chinese counterpart, while the U.S. preps investment curbs. Here to take us through all things geopolitics, Enda Kern joining us now. And just want to first talk about the lack of reaction to what's transpired over in Russia. And honestly, even in China, we're not talking about this, but they've been taking a much more controlling role in the market as they face off with a slowing economy. What's catching your eye that we should be more focused on that we're not?
Well, on the China side, very controlled messaging, Lisa, like you say. There wasn't much commentary at all when the picture in Russia was as unclear as it was on Saturday. We have had commentary since then, making clear that in Beijing they've said it's an internal matter for Russia. They've noted that things are calm. There was one comment from an official, though, that said there should be clear communications at all times, and maybe that's a hint that Beijing was unhappy that Moscow wasn't keeping it up to date on what exactly was going on there. But nonetheless, as you mentioned, China's trying to keep that to the sideshow. On the other other hand, of course, we've got a slowdown in the economy, pressure in the markets there, but that's also about control. China clearly trying to keep a lid on the volatility there, and it speaks to the overall narrative of China's economy at the moment. The government's in charge and trying to manage this sort of steady slowdown.
And the irony, as we talk about China and we think about the housing market and all the leverage there and the inflation, that they don't want to reflate necessarily through their stimulus. Here in the U.S., we're looking at a housing market that supposedly saw a big hit from interest rates rising, but it's been recovering. We just got data, home prices in the U.S. rising for a third straight month. How much is this a problem for a Fed that was looking for a long and variable lag effect to really hit housing hard?
The housing story is confusing here at the moment, Lisa, no doubt about it. I mean, to make the quick observation, obviously a housing crash would be a much bigger problem for the Fed, given the wealth destruction that would have on household incomes. So in terms of raising interest rates and trying to pull off a soft landing, the Fed would probably take where it's at. But nonetheless, it is interesting that despite the 5 odd percentage points of rate hikes, house prices are expected to keep cooling. It looks as though some people are saying they may have bottomed, maybe taking off from here, adding to the whole the unaffordability complex, adding to the whole inflation demand story side of things. It's a confusing story because, as you know, a lot of people say, why would you look to sell your house at the moment and move if you've got mortgages locked in at a rock bottom rate? But of course, rents are also under pressure. There's a lot going on in the housing market. It does look like it may have bottomed now, but I think we'll get a clearer picture over the months ahead.
And people are saying if rates stay this high for a very long time, it might change the scenario. Enda, thank you so much, as always. Still with us is RBC's Lori Calvasina. And Lori, I'd love your view on the home builders and the dynamism that we've seen in the housing space at a time when this is supposed to be one of the harder hit areas for more restrictive monetary policy.
So look, I think the data speaks for itself, which is that we're starting to see, after a number of indicators sort of went down to typical lows, we're starting to see this recovery that's in place. And I think it just speaks to the underlying resilience of consumers and the consumer balance sheet and all the repair that was done during COVID. And by the way, just the fact that life does simply go on. And I think that the resiliency of the consumers has simply been underestimated this time around. And we talk a lot about the World War II scenario, Lisa, sort of why we skipped a recession in 1945. And I'll give you the short answer, which is that there was a lot of strength in the underlying economy with consumers and with corporations, even though you did have technically a real recession in terms of real GDP declining and job losses. And markets back then were able to sort of focus on the big picture and sense that underlying strength. And I think this is a symptom of that underlying strength that we're seeing here today.
At a certain point, though, doesn't this mean that the Fed has to raise rates even further, Lori, and tighten that much more simply because of the lack of interest rate sensitivity?
I think that once we really start to see, and by the way, I think it's already started, but once we start to see more evidence that inflation is under control, I think the Fed is going to lose its rationale for those rate hikes. And I think at a certain point in time, they're going to get challenged on the idea of why are you pursuing this just for the sake of pursuing this? This is supposed to be something that addresses the inflation problem. And once that is under control, it looks like we're well on our way. I don't think that they're really going to have the case to keep pressing. And I think at a certain point in time, we have to all just sort of sit back and say, okay, the economy is okay, and it's okay that the economy is okay. Because of this Fed dynamic, there's been a reluctance to admit that, but it is possible the Fed is going to pull this off.
We have seen home builders rally. Are you on that camp where you see that actually continuing?
So look, what I've talked about with the home builders, and we don't make recommendations on that space specifically, but they did turn around last year right around when the small cap stocks started to turn around. And a lot of those do tend to be sort of small to medium in terms of their market capitalization. And so I think that, very much like the Russell 2000 last summer, that part of the market sniffed out a recession pretty early. It was one of the early leaders in terms of pricing that kind of risk in.
Lori Calvasina, thank you so much. A pleasure as always. Right now, let's take a look at some of those sectors. We get to Abigail Doolittle of Bloomberg with a breakdown of what's going on today. Abby.
Well, Lisa, with the S&P 500 up about 0.3%, very light volume. We do have more sectors higher than not, led by consumer discretionary up 1%. We also have tech up 0.9% to the downside. Healthcare down 0.5%. Interesting, though, over the last 5 days, those big tech sectors, well, those are the ones that are dragging on the market. It's going to be interesting to see whether or not the market does what it did yesterday, start off a little higher like today, and then reverse lower, and whether those big tech sectors that are down over the last 5 days, whether or not they can stay up on the session.
Abigail, thank you. Coming up, the market-moving events you need to be watching. That's
technology,
next.
the best-performing sector on a year-to-date basis in the S&P 500 among all 11 of them, and consequentially the most important sector because it's 28% of the broader S&P. Now, the technology sector spider is one of the ETFs that a lot of investors and traders use to take a view on the sector. It's been a momentum juggernaut. As you can see here, I put the 200-day moving technology, the best-performing sector on a year-to-date basis in the S&P 500 among all 11 of them, and consequentially the most important longer-term trend and where it is right now, it's about 20% now, the technology sector spider is where it is and has been over the course of the last 200 days on average on a rolling basis. By the way, it's been a momentum juggernaut. As you can see here, I put the 200-day moving average in the orange line down here. What's been powering? Year-to-date basis, it's been semiconductors, but they've been volatile. Between the 200-day moving average and the longer-term trend in particular that are leading the tech sector higher in terms of momentum than where it is and has been over the course of the last 200 days on average on a rolling basis. By the way, the S&P 500 itself is closer to 10% moving average, its 200-day moving average. 80-some percent what's been powering its 200-day trend line, so that's a big move there. They've been volatile, both to the downside and to the upside. Check those shares out in particular that are leading the tech sector higher in terms of momentum and its longer-term trend line. No surprise there, artificial intelligence at this stage. So 181% year-to-date gain. Sorted out for the rest of the tech sector. Moving average is roughly particular. The biggest part of the weighting is now about 20 big move there. And then Broadcom is the other moving average. So check those shares out. Again, a huge move higher, but the gap between where it is right now and its longer-term trend line is over 40% at this stage.
There's some discussion, Mike, about whether or not there's apprehension
sorted out for the rest of the tech sector.
Meta gets to 300, Apple gets to 3 trillion.
The biggest part of the weighting
is now about
20%.
A real
above its 200-day moving average. So those stocks have been pounding the gains.
Apple is obviously in its own category toward that 3 trillion mark. But if you break down the numbers, it's expensive.
There's some discussion, Mike,
history, but it's
about
been
whether or
more
not there's
apprehension
as
3 years ago
Meta gets to 300, Apple gets to 3 trillion.
If you look at like a 4% free cash flow yield, that's not insane.
So,
what are we talking about? We're talking about a company on massive valuations that much higher. Now, Apple is obviously in its own category, buys back its stock toward that 3 trillion mark. But if you break down the numbers, I do think in general people are uncomfortable with how far these things have run. They're uncomfortable also 3 years ago or so in the summer of 2020. Everyone in the bear market, if you look, it's like a 4% free cash flow yield. That's leaders never lead you out. So, what are we talking about? We're talking about a company on massive scale, at least to this phase, getting back 60% of what was lost buys back its stock every day in the downturn last year, and has that valuation. So, I do think in general people are uncomfortable with how far these things have run. They're uncomfortable also with the idea
some breaking economic data at the top of the hour. And Charles Schwab's chief strategist Liz Ann Saunders will join us to react.
And here we have these companies actually leading us, at least to this phase, getting back 60% of what was lost in the downturn last year. And so people don't know how to process that very well.
Mike, thanks for joining. Always good to have you. Mike Santoli, a lot more from him, of course, all day long. Some breaking economic data at the top of the hour. And Charles Schwab's chief strategist Liz Ann Saunders will join us